This is our Forex blog for February 22nd, 2001. And like most days, we're looking for the dollar and the yen to see what their real-time momentum is. You can see the dollar's daily, weekly, monthly trend was down. Yesterday it was pretty weak earlier. Um, if a currency is down too many days in a row, oftentimes it'll have some counter trend strength. You can see the yen last night became pretty strong. In fact, the daily and the weekly shifted to up. The monthly trend's still down. So if you start to see the yen pairs lose some strength, it's possible the longer term trend, right at the beginning of when a weekly trend switches up, it can flip back down. The New Zealand was extremely weak across the board. The Swiss extremely strong. And so last night, not many of us trade the Australian. Hold on a second. Let me scroll this in the full. Not many of us trade the Australian Swiss, but when you have one currency that's this weak, another one that's this strong, or the New Zealand Swiss, very high probability trades. We'll bring that up on here. Australian Swiss, you can see pretty much fell the entire day, and it fell over 100 pips. I'm sure the same exact thing will be the case on the New Zealand Swiss, over 100 pips. And this one, unfortunately, is a little bit more risky than the previous one because it was way underneath the lower containment band. The only safe times to sell underneath the lower containment band is about a 2-hour sideways range. This one doesn't quite meet it. And you also, anytime it's underneath the lower containment band, usually want to exit your entire trade at the fib target. So there's not a whole lot of upside by selling down there, in terms of additional profit. Somewhere around 5:30, the euro became one of the strongest currencies, and the monthly trend was just slightly up at that time. Weekly trend shifted up a little bit after 5:30. The dollar, let me scroll forward. We had it on the previous day. The dollar's weakness was there, and anytime one currency is super strong, especially if the longer term trend is there, and the other one's weak, usually have some continuation. Here's at 5:30 when it really showed up there. We're working on some tools that will let us know pretty early in the move, right around 80. The tool I'm working on now showed significant strength, so we could have got into that little scalp way earlier. I was afraid to take this myself, mainly because it had shot up, incredibly. It also had a lot of weakness last night, and the next resistance area is right here, right here, right here. In retrospect, obviously should have looked to take the trade. And some of the things we're working on is should let us know if a riskier trade like this is higher probability in real time. The New Zealand extremely weak. The yen had a lot of strength last night. So the Australian yen and New Zealand yen, great shorts, as you can see. These fib levels were support. Once it broke there, you can see the market fell right down to the 50-day moving average down there. Draw your fibs on there, and it was just a few pips away from the 1.618 fib level. Anytime you see a currency is way underneath the lower band, most of the time it's going to find support at the 20 or the 50. And as far as counter trend trades go, anytime you see a double bottom way underneath the lower band with less weakness than the first time, it's a great counter trend buy. Same thing happened in the pound yen. Phenomenal. Came down with a lot of weakness, hit our Fibonacci retracement level. The weekly monthly trend's up, double bottomed right here with less than half the weakness it had before. Great place to get in, and most of the time these work their way back up to the hourly. I didn't take this trade, but I did call it out in class. It did go sideways here long enough that when it broke over that area, I said it was very likely to go up to the hourly moving average. And I also told traders in our live room this is a pretty high probability place to sell, given the fact that the momentum, on the way up there wasn't too strong. It's also an Elliott two-wave fib pullback, and that was the reasoning for that. You can see it touched that 1.618 area almost to the pip, and only pulled back about 30 pips. Then it double topped here a little bit later with even less weakness than before, and then this, obviously the yen got strong again and it fell like a rock. The euro yen was also a decent, not quite a double bottom. This is more of a 1, 2, 3 pattern. And any time, again, that currencies are underneath the lower band, you draw your fibs on them, and most of the time you can pretty safely, buy when it makes a lower low at a fib level. The Fibonacci retracement level is here too on the longer term chart, and you can see it made a lower low with even less weakness than before. So if you got in that trade right here and you saw this kind of come up and pull back a little bit, notice it wasn't that weak. If you weren't in it, if you're not a super aggressive trader and buying the lows like that, this is a perfect 1, 2, 3 pattern right here, confirmed with less weakness than before. Unfortunately, the weekly trend had shifted down. The monthly trend's still up. Once it started to go up, you can see the weekly trend shifted back up. Most of the time, the hourly moving average is your profit target. Again, this was off the charts strong, just like the euro dollar was, and when it broke out over this little hour sideways range, we should have taken that trade. Some of these trades I don't feel comfortable, doing big lot positions in, so I'm just going to start trading them with, 1, 2, or 3 lots instead of, 5 or 10. But you can see this shot up from 25 all the way up to 85 for a nice, beautiful 60 pip move. This is our trend explosion system right there. Plus, as this thing came up to the upper containment band, which most of the time contains price, you can see the statistical strength all but disappeared, and then it fell like a rock right there. Very high probability counter trend trade. And one of the trades that I called out and took was the dollar CAD. This is the 10-day moving average was here. The weekly monthly trend was down. I really got in a little bit early here around 71 or 72. Added a little bit up here at 79 at the 10-day moving average, and it went a little bit beyond that and then came down. But a beautiful trade in the direction of the longer term trend, and it made a higher high with less strength than before. Sometimes you got to scale into these trades that because you don't know exactly what support or resistance area it will go to, and sometimes it pushes up a little bit more. One of the reasons I felt safe in selling the highs here in the dollar CAD is because the CAD yen was not going any lower. At the same exact time, we had a double bottom with divergence, and if this thing broke down and went underneath the whole number and broke the lows here, more than likely the other trade would fail too. That would show a weakness in the CAD, and the dollar CAD, therefore would have likely gone up. But anytime you can watch other currencies to kind of get a feel for what they're doing. In other words, if you bought the pound dollar and it's going up, but the pound yen's going sideways or down, your pound dollar trade's less likely to work. And that's the exact same thing here using the CAD yen. Double bottomed right at one of our trading zones, likely reversal, whole number. It had extreme weakness earlier, less there, and it's also a fib target of this last little mini wave right here. It went right to the 1.618, and usually I don't draw those on my charts. I can kind of eyeball them. It doesn't have to be right to the pip at a fib level, but you can generally see where it's likely to be a fib target, lower containment band. This one, unlike the other one, the weekly trend was down. I chose the dollar CAD because the weekly trend was down also, and I was selling the highs. I thought it was a little bit higher probability, and it worked well. It pulled back about 35, 40 pips, from that point that I called out. If this trend was, the weekly monthly trend was up, you might have drew your fibs on this wave here and look for an Elliott two-wave pullback right here. Especially when the weekly monthly trend's up, especially when these fib levels are at or above the hourly moving average. It's not quite as good a trade when the price breaks underneath the hourly. You got to give a little bit more time to get in the trade.